All right, guys and gals, back to work tonight, Tuesday evening, March the 9th, 2021. My name is Joseph. As always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's so great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's trading session. I got a jam-packed video in store for you guys tonight. Charts are all prepped up, as you can see in front of me. Got the E-mini, got the Nasdaq, and of course we got that gold on our radar for tomorrow. Boy, lots of big stuff we're tracking for tomorrow. We got some big news on the schedule for tomorrow. I want to make sure you guys know when that is so you're ready. And as you can see, we got some big moves on the charts today here. So lots of great opportunities we're tracking for tomorrow's Wednesday's trading session. But here's the big question. If you missed that 1, 2, 3 reversal we talked about in last night's video newsletter, if you recall, last night we talked about how to trade the market if it reverses. If you missed that 1, 2, 3 reversal pattern on pretty much all three of these markets, where's the next place to get in? So if you missed the reversal, or if you grabbed the reversal and now you're looking to add more, where's the best place to look to add more? Or if you did miss the reversal, where's the best place to get in on this move going higher? I'm going to answer both of those questions in tonight's video because, as you can see, large blocks, large moves going higher here on the gold, on the Nasdaq, and of course on the S&P. So, lot to cover here tonight. Before we jump in though and get this video going, I just want to make sure to remind you, as always, if you haven't done so already, make sure you subscribe to this YouTube channel. You know, we publish this video newsletter every evening with our best trade ideas for the following day. I don't want you to miss tomorrow night's video newsletter. So make sure you subscribe to our YouTube channel, hit that little bell icon so you always get notified every time I publish something new. And as always, if you guys have any questions, you can always drop those questions in the comment section below. I'll get them answered as soon as possible. And if you like this video, as much as I enjoy making it, do me a big favor tonight. Hit that like button, hit that thumbs up button here for me. If you enjoy the video, thank you so much for tuning in. Make sure you subscribe, drop those questions in the comment section below, and thumbs up if you guys enjoy the content here on this video newsletter. But enough of the introduction though, let's get this thing going. As I mentioned before, we have strong moves up on the E-mini, strong moves up on the Nasdaq, and a strong move up into a range on the gold right now. Now, like I mentioned before, this move higher might have caught you off guard, right? The markets were all bearish going to the close yesterday evening. So if you missed that 1, 2, 3 reversal, we'll talk about how to get back in or get into this move. And of course, we'll talk about all the best entry setups. Before we do that though, let's make sure we check the calendar for tomorrow, because tomorrow is kind of the beginning of all the major news that we have in this second week of the month. Now, as I mentioned in last night's newsletter, the second week of the month is typically one of the more quiet news weeks, not necessarily quiet volatility weeks as we're seeing. The month of March overall tends to be a more volatile month of the year for many different reasons. We'll talk more details in the future. But we don't expect a lot of news on this second week of the month. However, though, you could definitely see tomorrow being a Wednesday, there is certainly some big news on the calendar, specifically that CPI report at 8:30 Eastern Time. That's really, besides the PPI number on Friday, that really is the big news of the week. So CPI report is definitely going to be on my radar tomorrow morning. It's bright and early at 8:30 Eastern Time, which means you definitely don't want to get to the markets late tomorrow. Get there early, get those charts updated after the overnight session, and be ready for some fireworks in the wake of that CPI report. Everyone's talking about inflation with rates. That CPI report, right, that consumer price index is going to be on everyone's radar tomorrow. Remember, we're not going to actually trade the news, right? That's a rookie mistake. We don't trade the news. We give it 5-10 minutes and we trade the reaction to that news, right? Do we get bullish, bearish, ranges, and we formulate a plan once we update after that news comes out. Now, don't forget, tomorrow morning, we're going to be in our trade room at 8 o'clock Eastern Time. So we'll hurry up, get all prepped up, and we'll be trading the reaction to that CPI report at 8:30 Eastern Time. Now, like I mentioned in last night's video, we do consistently see the best setups right now happening between about 9:45 and 11 o'clock, right? I talked about that in last night's video. And sure enough, that's exactly what happened today, right? A little bit chop and slop in the pre-market and then nice big run right after about 9:45 into that 11 o'clock lunchtime bell. So again, big news tomorrow at 8:30, but don't be surprised too if we see another great run there, or at least some of the best setups in that 10 o'clock, right? That 10 o'clock block. And again, tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room. Now, as you can see, we get some more news coming later this week, right? Thursday's going to be a big day. Got jobs on Thursday. Don't forget, we are still watching E-mini roll on Thursday. Thursday or Friday, right? As of right now, it doesn't look like the E-minis are going anywhere. We are currently on the March contract on the E-mini. It doesn't look like that June contract is anywhere close to overcoming the S&P. Tomorrow, the Nasdaq, same thing, right? That June contract is a ways away. So we are definitely not looking at rollover tomorrow, but we'll be watching it on Thursday into Friday. And again, Friday, of course, right, is that PPI number. We'll talk more about that stuff once we get there. Tomorrow morning, CPI report though. And again, if you could only be at your desk for an hour tomorrow, I would definitely probably choose that 10 o'clock to 11 o'clock block. That has been where some of the best setups have been over the past few months. Back to our charts here tonight. S&P's ready. Nasdaq's ready. Gold is ready. Glad to see you are ready right along with me here. Let's jump into the E-mini first. The E-mini S&P. And what happened, right? Big, strong move higher here. We get that classic, right? That classic 1, 2, 3 reversal into first pullback is always the best pullback, right? So like I said earlier, if you miss that 1, 2, 3 reversal setup that we talked about in last night's newsletter, market runs higher here on incredible strength, right? Runs all the way up to complete the measured move, right? Big juicy measured move. And of course that big round number at 3,900. One of the most important clues on this chart, though, is the market basically just tops out and comes right back down again and leaves what we call an open loop in our trade room. Now, an open loop is a metaphor that I use for a big magnet. You know, it's almost like, what happens is when a market makes these big, strong runs like this, it creates this tension in the market. It creates this kind of FOMO, right? Nobody wants to miss out on that next pullback because, the odds are pretty good that if we get this much strength going higher, we're probably going to end up at some point tomorrow back up retesting that high. Now, where we go from there is anybody's guess. But anytime I see a strong move in one direction, I know that it's very likely we pull back to support. We're going to see buyers coming in and trying to get that run back up to retest the high. So I use the term open loop. It's kind of a metaphor that I like for, open loops want to be closed, right? It's almost like unfinished business. The way I look at the chart is there's such strong momentum. There's so little pullbacks there, right? That everybody's thinking, how do I get in on this? And the odds are very high to go back up and kind of quote unquote close the loop, right? It's kind of a metaphor we use as a magnet, right? Unfinished business up at that high. So we know we're bullish. I want to be a buyer. The sellers have a very strong pullback, though, you'll see, right? Again, it's almost like a V-top, right? It goes up and almost comes right off of that high. And what is really interesting about the chart, if I kind of get rid of these measured moves here for us, what is really interesting, at least in my point of view, is we're kind of blending two channels together. You'll notice, and of course, I'm looking for support levels, right? It's a bull market. I want to buy at a support level. And you'll notice I've got these two levels marked up here. But let me show you what I'm looking at right now. The first things first, we have that strong jump into that tight little narrow, what we call a spiking channel. Spiking channels are really powerful chart patterns because they almost always at some point pull back to the base of that channel. Right? If you've been following my newsletter or if you're with me every morning in the trade room, spiking channels are like a top 5 chart pattern that every trader really should learn. They should be teaching these patterns in school, to be honest with you. So we know the base of that channel, right? Basically, it's where the spike meets that channel. That's where we want to buy the pullback, right? So that's one spot right there. That's where I get the battle zone from. But look what else we have, which is very interesting. You'll notice if you draw that trend line off the high and bring it down to that low, you'll notice it's a gorgeous example of exactly how I would draw a brand new hidden channel, right? We go higher here, we draw that trend line off the highs, and it creates that kind of, that very deep pullback area, which we call hidden channels, or as my members in the trade room like to call it, professional channels, right? Because only experienced traders really live long enough in the markets to learn this type of stuff. So the reality is we're very bullish. We got the open loop at the high, right? Just begging to be retested. And we're right down in the base of that spiking channel and the low of that really large, wide, hidden channel. So I want to be a buyer. But here's the problem. We have all of this momentum on the pullback. That is not a shallow pullback, right? That is a deep dive pullback. It's not like we're just barely below the moving average and I can look for a failure going back up again. It's a very deep pullback. So in this situation, I'm always kind of reminding my clients to always ask yourself these kind of two important questions. How is location and how is momentum? If you answer these two questions before you take a trade, you'll be amazed how easy it is to avoid losses. So for example, how is location? Location is primo, right? It's a great location. Battle zone, channel low, it's a great location. But here's the problem though. Momentum, right? Momentum isn't exactly that great for the buyers. It's a very deep, very strong pullback you can see here. Most likely it was profit taking, but it doesn't matter what the reason for it is. With that strong move coming off that high, remember, anytime we see a strong move in one direction, we're going to probably see what? Another leg in the same direction. So I really have to protect myself. Yes, I do want to be a buyer, but no, I don't want to be too aggressive buying into this. And for all I know, this market may have jumped up on stimulus news and it may come right back down to that weekend gap by tomorrow, right? So I want to be a buyer on this. I just have to be careful with this momentum. So what's the best way to do this? Well, first of all, as we test that low now, I'm anticipating sellers, right? I'm expecting sellers are going to want to come in and shoot this thing lower. In fact, if I had to guess where those bears would come in, I would guess they would probably be, if I can get this thing to come over here for us, maybe not, I would expect them to probably be up around that high at 84.5, right? 84.5 up there at that high. So here's what I want. I'm going to anticipate the sellers coming in and trying to eat my lunch, right? By trapping that high above that high there. That's what I would be doing if I was a seller. If I was a seller, I'd be drawing that channel off those lows, off that high, and I'd be looking to sell short on that trap. I don't think it's a good spot to sell short yet. I don't think we're quite there yet. So I'm going to anticipate those bears. I'm going to let them try once. I'm going to let them try twice. And then once I have those bears locked in, specifically, once I see them getting short above that 84.5 area, now I've got them right where I want them. And ideally what I want here is kind of one of two variations. The first one would be buying off that support trend line. That would be a great way to trigger that, what I call a failure setup, right? It's just basically waiting for the bears to try a few times so I can buy into those stop losses. Another variation of that would be, let's say, for example, we get the bears trying once and going higher here. At this point now, I don't want to buy high, right? Remember, you want to be very careful when that trend line is really steep like that. So if it really kind of shoots higher here, I'm going to look for a trap entry to make sure I really resist the temptation to chase that market higher. Does that make sense, guys? Right? So again, I want to see bears trying once, bears trying twice. Ideally, I can buy off the low of that or off that support trend line. That's one option. The more aggressive entry is buying into stop losses, right? Because everyone stops will be right above that high. That's one option for me. Again, a nested failure pattern. Target, of course, is back up to retest those highs. Or if we get that, relatively steep move, right? 1 and 2 like that. Again, you're not gonna want to buy that steep trend line. I'll look for a trap in that situation. Same idea, right? Same idea. Bears trying twice, looking for that trap low, and again, target will be back up to retest the high. So that's as the market runs higher. Now, at the same time, let's say good news comes back into the market, right? The market jumps up, holds a pullback, and runs off that, right, off the moving average, right? If it does one of these, right, 1, 2, go, like that, what do? We mark up the high, mark up that low, and we look to get that first test, right? That first buy off that low. So, for all I know, there might be some more news comes out overnight. Markets might start popping up in Asia in the overnight. We may see a strong run higher. Moving average comes over. Buyers come in and buy that pullback. I'm not in the business of buying that pullback into the high, but I will definitely be looking for that 1, 2, 3 reversal or 1, 2, 3 breakout. Again, we saw it pretty much right there as well. Mark up that high, mark up that low, and I always want that first test, right? I want the first test of that channel. The first test is always the best test. Now, maybe you're wondering here, as the market goes higher here, can I short this top, right? That's a good question. You definitely can. So let's say, for example, as we go back up, we retest the high, right? We get the nested, whatever variation of that we get, but we end up going back up now and retesting those tops. Is there a point where I can look to sell off of that high? I definitely can. Here's the problem though. It's such a bullish market at this point. We really have to break out what I call the crown reversal pattern, which is basically a nested failure with a trap high on it. So imagine now we go back up, we take out those highs, or maybe we go a bit through the highs, right? Then we start to pull back. The buyers try once, the buyers try twice. This is where that trap high comes in. It's one of my favorite reversals. Now, I'm going to cover a lot of reversal patterns in our video classes, but this is the one I think that even the newest of traders can find simply. It's a pretty simple pattern. The key, though, is make sure you stay patient. Make sure they take out those highs. Let the buyers try to buy it once, lower low, buy it twice, trap high, and you've got that nice short, right, coming off of that high. These crown reversals are great in ranges. That's where they really, really succeed. Range-bound markets are where I love to use these crown reversals, which reminds me, I cover range-bound markets along with this crown reversal and really all of our favorite entry setups. If you want to get more examples of this crown reversal, it's definitely something worth learning. I cover all those details in our free trading course. What I'll do is I'll put a little pop-up there in the upper right-hand corner for you. Grab that little pop-up. If you haven't done so already, make sure you grab that free trading course. Inside that free course, you'll learn how to find all the support and resistance levels. You'll learn to find my entry setups, trade management. You'll learn all the basics of this 3-step strategy that we use every day in our trade room. That way, the next time you come back and watch the newsletter and I say a nested failure, you'll know exactly what it really looks like, right? I'm just simply marking the charts right now. All right, so grab that free course linked up in the upper right-hand corner. You will definitely love the free course. Everyone loves that, and you and I can work better together here on this video newsletter. Now, another thing to keep in mind too is the market may go up, it may hit that high, and then we might see this thing reverse, right? 1, 2, 3 reversal here. At that point, I'm not going to sell the first pullback, but I'll watch that 1, 2, 3 move, mark that low, mark that high, and get short on the first pullback. So there definitely are ways to sell off of this high right now. The challenge, of course, will be we're way too bullish to get short just yet. Either looking for crown reversals off the high of day or get that up and then reversal back over, right? That 1, 2, 3 reversal pattern. Again, I'm not going to trade the first pullback. That's a mistake. Not a very reliable setup there, but I will definitely have my hard hat on and hit it hard right off the top of that channel. If the bears can actually get their hooks in this thing tomorrow, the weekend gap is an easy magnet at 40.5, and of course that low of day down there at 38.16 would be a cherry on top if the bears can take control on this. Now, I'm sure you're wondering, what if the market goes lower here? At what point can I start to buy it? Can I start to sell it? Honestly, if the market runs a little bit lower here, there could be a slight variation, right, of that channel. So in all reality, that channel may not be exactly where I think it is. It might be a little bit lower. So don't be surprised if the market goes a little bit lower here, right, in the pre-market, and then you start getting that 1, 2, again, draw the trend line, buy your stops, right? So you know where stops are for the buyers. All I'm doing is I'm waiting for those bears to get committed. I'm buying off that support trend line, right? I'm buying off of, right, buying into those stop losses, right, as the market goes higher here. Great, again, great, not reversal pattern, but a failure pattern right here for the bulls, waiting for the bears to try it. Now, at the same time, if this thing goes lower, or if they pull back and the bears take this thing, right? If we get that 1, 2, 3 reversal, now it's on. Now there's a big bullseye right at that weekend gap, a big target on 16 1/4. The bears, if they can get their hooks into this thing with that 1, 2, 3 reversal, I can now mark up that low, I can mark up that high, and I can look for the first test off the high of that channel. Now remember, we're not just simply selling the top of that channel, right? Most of the time what will happen is when you get up into that channel, it'll be like a buyer failure, into pullback, into strength, into trap. There's so many ways we can sell off the top of that channel, buy right as the moving average comes over, right? So imagine, right, you're in this area right there, right? Imagine you're zoomed in on that area here, right? We're not trading an 8,000 tick chart in our trade room, right? We're trading a 1,000 tick chart in the trade room. So much easier to do that on a faster time frame. But if we do get that 1, 2, 3 reversal, then we can go in and we can look for that failure pattern, pullback pattern, trap pattern. And again, you're going to learn a lot more about those pattern setups. I can't go over all of them right now, but you grab that free trading course, you'll see a lot of examples of those specific entry signals that we use, entry triggers that we use every day in our trade room. So as the market runs lower, we know how to trade it going lower. We know how to trade it going higher here. The only other thing right now is keep your eyes open for ranges, right? Keep your eyes open for ranges. And we're going to talk about ranges on the gold, because gold definitely has a range on our radar for tomorrow. We'll get to gold here in a moment. We'll talk about how to trade ranges here on the gold once we get there. How about some Nasdaq? Nasdaq, of course, very similar to the S&P 500, but a little bit different, right? A little bit different here. I really like the way the Nasdaq looks right now. Nasdaq has a very good look to it, and you'll see a lot of similarities here between the S&P and the Nasdaq. First of all, you can see the buyers, of course, right? Buyers got one big leg up, two big legs up, completed that, right, as you would say, kind of a measured move up at that high, right? Very good example there of that, right, of that measured move getting taken out. So that is obviously, or was their objective for those buyers. One leg, two leg up. Anytime we have a trending market, we know measured moves are going to be the objective. We talk about that in the free trading course as well. And you'll also see too, right, that with that 1, 2, 3 reversal, remember I said earlier, right, if you miss that reversal, mark up that high, mark up that low, either that one or that one, either one of those, depending on how you drew the channel. If you drew it like that, right, it works as well. So, no matter how you drew that channel, you could have really waited on that. First test is always the best test. So now, if you miss the reversal, right, or maybe you grab the reversal now and you're playing with house money, where's the next best entry? So of course, same thing as the S&P, right? Two channels here. I've got the spiking channel. That spiking channel spikes up, pulls back, right, into a spiking channel. The base, right, the base of that channel is where we almost always see those deep pullbacks, right? Great spot there. Again, kind of blending two channels together. And then from there, right, I can take that high, I can bring it down to that low, and that looks great. It really does, right? It looks great. So again, that channel might be a little bit wider. It might be a little bit deeper, right? So, but I wouldn't stress out too much about that detail. Right now, our biggest concern right now is we're way too high to buy this market, right? We're way too high right now. I want to buy at a support level on a deep, what will have to be now a relatively deep pullback. Now, the Nasdaq looks like it might want to go sideways, and we're going to talk about ranges in a moment on the gold. But a lot of this is very similar here on the S&P 500. There's one big difference, I think, on the Nasdaq, and that is, the S&P had this big drop down already. So we already know the S&P has the big pullback. We don't exactly know if the Nasdaq's going to give us a very deep pullback right now. We don't, right? So what we do know is that we have a very strong move higher. Again, anytime we see this much strength in one direction, we know there's a good chance they're going to come back and at some point tomorrow retest those highs. And I'd like to find a way in on that pullback. Now, we talked about those 3 types of pullbacks in last night's newsletter, and that's kind of what we're looking for here right now. So, for example, there's like a range right here. I left it off purposely because I didn't want to spoil it for you, but there's a little range right there, right? Little tiny overlapping candlesticks, you know what I mean? Little tiny overlapping candlesticks. It's a tiny little range. Now, ranges are magnets, as you guys probably have heard me say before. So there's a good chance here that we pull back, but we don't get that full pullback. Now, how do we treat a shallow pullback? Well, hold on. 2 questions, right? Location and momentum. I still got it on the keyboard. Location and momentum. So first of all, how is momentum right now? Momentum is great, right? I've got a great amount of bullishness right now. We look great. How's location? Not that great, right? We're right around those highs, right? You know what I mean? If you look left, we're not that impressive. Well, it is a very impressive move today. It was the biggest move higher in the Nasdaq in 4 months. So it was a pretty darn good move. But again, there's a lot of momentum. But do I really want, after all this movement going higher, do I really think buyers are going to come in here? They might, right? But probably not going to have a good appetite to buy a shallow pullback. So great momentum, but not a great location. It's kind of the opposite of the S&P, right? The S&P had that deep, deep pullback, great location, but horrible momentum, right, to be a buyer on it. So in this case, I've got bad location, great momentum. So what's the best entry setup I would use to trade a great momentum, but a bad location? What's my concern? My concern is I'm buying too high. And so I want to use what I call a trap setup, right? Very well known entry setup in price action trading is a trap. And ultimately, I want to get underneath a prior swing. So a trap entry is really going to be important if all we get is that shallow pullback to that range. Ranges are magnets, but when you have a big, strong move like this, they'll oftentimes pull back to that magnet area and then go, again, the open loop is still there. They'll go right back up and take it higher again. The key, though, is you're going to have to get the bears to come in and try a couple times just to get that trap to work, right? That's kind of how the whole situation works. So I want to get that trap to buy as low as I can. Great momentum, but bad location. And then if we can get that deep pullback, you'll notice, boy, what a great spot here. I've got this kind of expanding triangle coming out of that range, right? Ranges are notorious for expanding triangles like this. Love that trend line down there, how it lines up right on that channel, right? It's also the base of our spiking channel, right? So great spot right down there. But here's the problem then. If we get that deep pullback, same thing, right? I'm concerned about momentum now. Great location, not so great momentum. So if I'm worried about who? I'm worried about the bears coming in, right? I'm worried about those bears. So don't worry about them. Just give them respect, right? Give them the benefit of the doubt. Let them try once. Let them try twice. And again, one of the best ways to do it is to grab that trend line and buy, or buy right into those stop losses, right? So buying the trend line support, buying the stops we go higher. Again, what are these called? These are called nested failure patterns. We cover these in a lot of detail in the free trading course, and they're very, very common every day in our trade room. The key is don't rush it, right? Give the sellers a couple shots here, find that trend line, or simply buy into those stop losses for that target running back up to retest the high. Now, here's some food for thought here if we get a really deep pullback. Okay, if the market really pulls back here, which, there's a weekend gap down here. Let's say, for example, really get that deep pullback, right? Really deep pullback into those lows. Moving average comes over. Keep your eyes open. We talked about this last night on the newsletter. Keep your eyes open for that nested failure, right? 1, 2, draw that trend line, and then look for that up, draw small there, over, and pull back. Now, of course, these are all about timing the entry, right? So again, it's a nested failure into a hidden channel pullback. The reason I bring this up is because if we get the deep enough pullback, we'll have enough space as the market snaps back to retest those highs on that pullback. Okay, so deep pullback off the highs, bears try once, bears try twice. You're giving the sellers the benefit of the doubt like you need to. Whenever you get those really sharp, deep pullbacks, we're buying off the trend line. We're buying into stop losses, as I mentioned before. And then again, we're using that new channel coming in. As long as I can get that channel hit before we retest those highs. Great opportunity here, even on a really, really deep pullback. And then I'm sure you're wondering, okay, well, if we do get that deep pullback, at what point is it safe to be a seller? What you really got to be careful is as this market pulls back. Remember, this market never got below the moving average by very much today. The deepest pullback we saw the entire session today after that 1, 2, 3 reversal was that little guy right there. So there hasn't been very many pullbacks here right now. So if we do get that deep pullback, I would imagine a lot of buyers are going to be interested in getting in, going back to retest the high. I've got to really be careful with that move lower to wait to see if the bears can actually hold this and go. If I can get that 1, 2, 3 reversal pattern, what do we always say, right? Somebody quoted me the other day in the comments section. 1, 2, 3 reversal into what? Hidden channel pullback. And of course, you know it, the first test is always the best test, right? We're looking for failure patterns, looking for pullbacks, looking for strength moves, looking for traps here, right? Coming off the high of that channel. And again, I'm not going to go into all the details of all those specific entry setups that we use, but I do cover all of them in that free course linked up in the upper right-hand corner. And obviously, we'll do it together tomorrow morning in our trade room. So we know how to trade the reversal. We know how to trade the shallow pullback, the deep pullback. You want to be careful here, obviously, if it goes sideways. I'm going to cover the sideways plan on the gold here in a moment. So make sure you stay tuned right on the gold here. We'll cover that on the gold. What if the market keeps on going higher? If the market keeps on going higher, I would imagine that 13,000 juicy big round number is a target up there. And then look at all the space we have. A ton of open space there. The Nasdaq's been getting crushed the past few weeks. And so we could easily see this thing start to have a relief rally here as the bears who sold short over the last few weeks, the last month or so, right, as they exit their positions, some updates from stimulus, some good COVID vaccine updates. This could definitely rip higher here. Right now, though, I can't. I can't buy this thing just yet because we're too high up right into that measured move. But let's say, for example, though, the market grinds higher, right? Let's say it grinds higher here. If it grinds higher, not a lot changes. We still have a spike in channel. Now, at this point, it will be a little bit ridiculous to go all the way back to the base of that channel, right? So if it does keep grinding higher, at that point, what we'll do is we'll start to mark up some of these prior swings, right? And just focus on getting underneath those prior swings, right? Get under those prior swings, get those bears to come in, commit short, and we can use those stops for a failure. We can use the moving average for a pullback and up from there. Remember, these combination setups, these seller failures into bullish pullbacks are very, very common, right? When you get these kind of grinding markets here, okay? So if it does keep grinding higher, don't chase it, don't force it. Wait for that deep pullback. Again, get underneath some of those prior swings. That's going to be the key. Getting underneath those prior swings, trapping in those counter trend bears, and then making them pay on the pullback, right? Going higher back up to retest the high. Okay, if all hell breaks loose and this market rips higher here, why don't we trade it? As the market races higher here, if it does break out higher, and this will also go for the S&P as well, and gold for that matter, there are 2 breakout patterns I look for, right? One of them is that 1, 2, 3 breakout. So if we do make that strong run higher here, I'll gladly update this channel, mark up that high, mark up that low, and look for an entry setup off the low of that channel, right? Maybe it's a seller failure off that low, right? Seller failure into bullish pullback, into strength, into trap, right? Lots of easy ways to capitalize on that again, on that 1, 2, 3 breakout going higher and buying that first pullback. We're not just blindly buying that first pullback. Another pattern to keep an eye on would be a 2-try breakout. Let's say, for example, the market rips higher, races higher here. We see a quick, shallow pullback, doesn't really do much off the moving average, and goes higher. At that point, this strong move up, shallow pullback, higher high says, traps, baby. Traps are your go-to whenever you see a market run, shallow pullback, right? Remember, when the market barely touches that moving average, it doesn't let people get in, right? The only way to trade that is to chase it. And so a lot of traders won't chase that. Once they see that shallow pullback, not pullback all the way, and they see that higher high, everyone now kicks into that FOMO. Right? It creates stress in the market, tension in the market. Everybody wants to find their way in. It's almost like they can't resist themselves, right? That's a really great setup as we go higher, right? Call these 2-try breakout patterns. So whatever you do, though, just don't chase it, right, as it goes higher. Either wait for that 1, 2, 3 breakout or look for that 2-try breakout as we go higher here. So now we get a pretty good plan here for the Nasdaq going forward tomorrow. And again, make sure you grab that free course linked up in the upper right-hand corner because you'll learn a lot more about these entry setups. Unfortunately, I can't teach everything on this video newsletter. Next up here, let's grab some gold, right? The yellow metal. Last one on our radar here for today. So this is a possibility for what we might see here tomorrow on the Nasdaq. You'll notice here the gold, of course, racing higher here and then stalling out inside of a trading range. Now, the most important thing that we know about ranges is that ranges are magnets. Whenever I have a bull market that goes into a trading range, my job is to find levels of support, such as expanding triangles, such as the battle zone below, right? I want to find support levels that I can buy below this range. Okay, we probably have already heard before, when a market goes range bound, it's buy low, sell high, and focus on failures, right? Focus on breakout failures. Focus on breakouts that ultimately fail and go back up into that trading range. That's the general idea of a very bull market here into a trading range. The very specific instructions, though, that I want you to remember is you want to find a level of support. That's the key. We're not just buying low. We're buying at support levels below the range to give us a good trigger to go back into that range magnet. Okay, one of the tricks I like to use are prior swings, right? Prior swings, like that prior swing. Now that prior swing's a good distance away here, but that will be a great spot, right, to look for a long here tomorrow, right, underneath the prior swing. Most of the time, though, you'll get some prior swing a little bit higher up, right? Not a great example on this one, but I'm always looking for those prior swings, which we have right here. I'm also using the size of that range, right? I'm going to give you a little trick here. Take that range, copy and paste it down, right? Copy and paste it down, and you get that, right? And you get that, the top of that battle zone. All right. I'm not going to give away all my tricks here, but I want to make sure you guys know I'm not just guessing, right, on this 1706.9, right? You could also say, too, there's also a reversal line here, prior high there. But one thing I don't like about that reversal line, though, is it's a little bit too high up. It really doesn't give us a great risk-reward ratio. I really want to get into that battle zone below us. And, of course, I got my trend line underneath here acting as support. What I would, if I had it my way tomorrow, if they gave me what I wanted, I would get this thing to go sideways here for a little while. And the goal of that would be to get some separation off that trend line. Then we can pull back. Take out that trend line, take out the battle zone, wrap in those bears, right? Get those bears trying to sell short and simply buy right into their stop losses. So if I had it my way tomorrow, that's exactly what I'd be looking for here. Unfortunately, though, to really be able to use this trend line, we've got to kind of tread water a little bit here on this gold, as you can see. Okay? Now, just like on the S&P and the Nasdaq, a lot of this has to do with the strength of the pullback that we get. So for example, if all I do is get that little pullback, I'm going to have to look for one of those traps, right? Traps are great. whenever all we get is a shallow pullback. Not my favorite way to trade this because there's not a lot of meat on the bone, if you will, right? There's not a lot of profit potential there, but that would be how to trade on a shallow pullback. What I'd rather do is get this thing down off the low of that channel, get down into that battle zone, and again, get these bears to commit off that breakout pullback. When I was a new trader, I couldn't resist these breakout pullback trades. They always look so convincing, don't they? Breakouts always look so convincing. But guys, with all that momentum right now, right? Remember, this is almost like an open loop, right? They're going to want to go back and retest the high with that range magnet overhead. Just way too bullish to be trying to sell short on this. And they might hold it, right? If they do hold it and take it lower, that creates that 1, 2, 3 reversal pattern, right? So if they do hold it and go, again, I'm not going to sell that first pullback, but I'll gladly take the first test off the high of that channel. Remember, it doesn't matter where that thing is. If you get enough momentum with that 1, 2, 3, if you see enough juice coming off that moving average, that means the buyers have walked away, the bears have it, and most of the time, wise traders are not trying to call that first pullback. They're not going to miss that first pullback up top of that channel. So that's a really great setup there as you go lower. 1, 2, 3 reversal into hidden channel pullback. First test, always the best test. But again, I'm getting ahead of myself right now. We go down into the battle zone, right? We pull back to the moving average. Bears get short. They're trying to push this thing lower. Stops are easy pickings right now, right? What happens if you're short and you get stopped out? The only way out of that mess is to buy your way out. So now, if I can get long here by buying into stop losses, I can buy into stops, which means we have buyers buying and we have sellers buying. If you've got buyers buying and sellers start buying, that is a recipe for success. And that is why I love to combine support levels with failure patterns to buy below the low of that trading range. Now, I mentioned earlier, there's that little trap low. That would also be a great entry. But if we get that big pullback though, what's my problem? You know what I'm going to say, right? Location is good. Momentum, right? Momentum is not so good, right? Location looks great. Momentum, not that great, right? So if we get that big pullback now, you know the drill. Let them try twice. Let them try once. Let them try twice. Again, one variation, draw that trend line and buy off that trend line, right? Another easy way to do it is, because sometimes what happens is you'll have that trend line and they'll run it lower, but they won't actually give you the actual bounce off that trend line. It's okay. Stops are sitting right above those highs, right? So stops get hit. Again, you're simply using a failure pattern. It's a little bit more of a failure, right? It's a nested failure. Okay, the term nested meaning inside, right? It's inside the pullback here. Bear strike once, bear strike twice. We don't get the trend line, we get that stop run. And then don't forget too, right? If we get a deep enough pullback and the market rips higher here, if I can thread the needle, this one's tough because you don't want to buy in the highs, but if I can mark that high, mark that low, moving average often comes over, right? That next, right? That first pullback there. Okay, great spot there as we go back up to retest those big highs, right? Target is back up to retest the high. So we know how to trade this thing as it pulls back. Again, I would love to see us tread water for a little while. We may not get that, right? But I wouldn't mind, at all seeing it go sideways here for a while, wait for that pullback. Same basic idea, right? Deep pullback nested, shallow pullback trap. We've talked about this quite a bit here at this point on this video. Now, how about a breakout going higher? Could easily break out going higher, right? Big stimulus packages hitting. We got CPI report tomorrow. Are you kidding me? A CPI report, inflation report, gold. Come on. Gold is primed for a big move with that CPI report tomorrow morning. 1739.2. Big levels overhead. The big juicy target for the buyers here this week, next week, is that 17, we'll call it 60 area overhead. That's a big area. For right now, though, that 1739.2, it's a good spot there to look overhead. Now, the unfortunate part is I can't trade the breakout unless I get some proof, right? So 1, 2, 3 breakout, right? I'm not going to go buying that break higher because you know what happens, right? They all look so convincing. I'm going to buy that breakout higher. It's going to come right back down and make me remember why I don't trade breakouts. But you know what's going to happen, right? If you don't buy that breakout higher, it's going to hold that pullback and go. The markets have a sick sense of humor like that, don't they? It's like they know, okay, he's in, pull it back, right? We don't want to go chasing after it. So, put some good juju out there in the universe, right? Put some good stuff in the universe and wait for that 1, 2, 3, and then grab that, right? Grab that high, grab that low, right? And grab that first test. Much more reliable entry. And again, that could be a seller failure, bullish pullback, strength move, trap move going higher. I cover all these specific entry setups again in that free trading course. We also, of course, cover all the details, right, in our premium courses here at School of Trade. Or it rips higher. It gives you that shallow pullback, that teaser. Can't catch me, can't catch, right? That's what it's basically doing, right? The little teaser. It looks like this, right? It barely touches the moving average. It runs up on strength. Little teaser there. You can't catch me. Higher high. Everyone's going to remember that spot, and they will be waiting to hit that thing on that first pullback, right? That trap low. And then if you get lucky, you can draw that channel off the highs, off that low, and combine that with the low of that hidden channel. All right, we'll go into a lot more details obviously tomorrow. I can't cover everything, obviously, in this video. It's already long enough already. But don't you worry, though. Tomorrow morning, we'll put our heads together tomorrow, update our charts. CPI report is right out the gate tomorrow. I am looking forward to a great session with you guys tomorrow in our trade room. Don't forget, getting registered is very, very easy. I'll put all the info you guys need either below this video on the blog at Sideways Markets, or there'll be the link you guys need to get registered and come out and join us and trade along with us every day in our trade room. Don't be afraid to call the office. That toll-free phone number there is always a great option. We also have live chat on the left, live support on the right. Please don't be afraid to use those tools. We're always standing by to answer all your questions. But I hope by now you subscribe to our YouTube channel. I don't want you to miss tomorrow night's video newsletter. And as always, if you like the video, hit that like button. Don't be afraid to share this stuff with a good friend of yours. Everybody can benefit from this knowledge here on this video newsletter. But not for me today, though. I've taken up way too much of your valuable time. Have a great rest of your evening. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.